Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
C, a primary beneficiary of the AI-driven semiconductor CapEx boom. Rating upgrade. This article was written by Michael Fitzsimmons. Summary. Pause. KLA Corp. KLAC is rated a strong buy, driven by its dominant position in the process control niche and robust free cash flow profile. KLAC's premium valuation is justified by its wide moat, high profitability, and accelerating AI-driven semiconductor CapEx trends. Despite recent flat sequential sales and earnings, KLAC delivered 13% YOY sales growth and 20.2% YOY GAAP EPS growth. Risks include China trade tensions, AI data center build-out slowdowns, and potential equity market pullbacks impacting high multiple stocks. The stock of California-based semiconductor equipment maker KLA Corp. KLAC is plus 105% over the past year, driven by an AI-driven CapEx boom that has placed a premium valuation on the shares. KLA dominates the process control niche within the overall wafer fab equipment WFE market. With such a dominant position comes high-margin profitability. Today, I'll take a look at KLA to see if, after such a bullish run in the stock price, the company still represents a compelling investment. As you can see from the one-year total returns chart above, other than peer Lam Research LRCX, KLA has significantly outperformed peers ASML Holding, ASML, and Applied Materials AMAT, as well as the broad semiconductor sector, as represented by the VanEck Semiconductor ETF, SMH. I added the Vanguard S&P 500 ETF, VOO benchmark, to the comparison so investors can easily see the opportunity costs if they choose to neglect the very important semiconductor sector. I began my Seeking Alpha coverage on KLA Corp back in October of 2022, with KLA Q1 semiconductor equipment makers are not dead money, and initiated the stock with a buy rating. As you can see in the Seeking Alpha report card in the upper right-hand corner of that article, KLA stock has delivered total returns of 413% and has outperformed the S&P 500 by 330% since it was published. Investment thesis. You'd have to be on planet Pluto not to be aware of the AI-driven boom in semiconductors due to strong demand for leading-edge compute engines, GPUs from NVIDIA, XPUs from Broadcom, and TPUs from Google, among others like AMD. In addition, high-speed networking equipment and high-speed memory chips to keep these high-speed processors supplied with data are also seeing very high demand. High-performance, low-power chips for smartphones are also seeing strong demand. All these markets provide a strong fundamental demand tailwind for the semiconductor equipment makers like KLA, because growing semiconductor demand requires more semiconductor equipment to meet that demand. And that is why I am bullish on the semi-equipment sector as a whole. See, Semi-Equipment Showdown Applied Materials versus ASML Holding. In that article, I put a buy on ASML for its near monopoly in advanced lithography and a hold on Applied Materials. One reason for the hold on AMAT was that KLA dominates the process control market and has roughly 4 times the market share of that niche as compared to AMAT, its next closest competitor. Semiconductor CapEx boom. The fundamental demand backdrop just discussed has caused a boom in both semiconductor sales and CapEx spending for semiconductor capacity expansion in order to meet future demand. That statement is easily verified by a couple of recent data points. First, the Semiconductor Industry Association, SIA, reported November sales were plus 29.8% year-on-year, and as you can see from the graphic below, semiconductor revenue, blue line, is literally running off the chart. Secondly, the strong demand currently being seen has legs, at least according to TSMC, TSM, the leading semiconductor manufacturer on the planet. I say that because this week TSMC announced it plans to invest at least $250 billion in semiconductors, energy, and AI in the United States, as part of a trade deal for which, in return, the US will reduce tariffs on Taiwan to 15%. And of course, a large chunk of TSMC's spending will be for the semiconductor equipment required for the new fabs it plans to build in the United States, and additional capacity expansion in Taiwan as well. With that as a background, let's take a closer look at KLA. I'll start with a summary of its Q1 FY26 earnings report, which was for the quarter ended September 30th, 2025. The chart below was taken from the just referenced EPS report from KLA. As you can see from the graphic, and despite the bullish performance of KLAC stock of late, KLA's sequential sales growth was relatively flat QQK, and net income was actually down. That said, on a YOY basis, sales were up plus 13%, and GAAP EPS was up plus 20.2%. That's more like it. KLAC's process control segment accounted for 90% of sales, with a 74% mix of foundry logic customers, but that is expected to drop as memory customers are expected to come on strong over the coming quarters. China sales jumped and were 39% of total sales, up 9 full percentage points QQK, likely due to advanced orders in order to front-run the volatile trade environment and the potential for additional export controls by the Trump administration. In the short term, the stock responded negatively to the earnings report, as investors were clearly expecting better growth. In addition, guidance for advanced packaging was not increased for the first time in CY 2025, a disappointment that may signal that momentum may be slowing there. What was not disappointing at all was KLA's continuing very strong free cash flow generation. As you can see from the graphic, on $3.21 billion in sales revenue, KLA Corp generated a whopping $1.066 billion in free cash flow. That equates to 33% of total revenue and an estimated $8.05 per share based on the 132.4 million average fully diluted shares outstanding at the end of the quarter. Fantastic. And KLA's share count continues to fall due to the company's steady share buyback plan, which has been averaging over $500 million per quarter over the past year, which has reduced the outstanding shares by approximately 2.5 million YAI. Going forward, KLAC's Q2 FY26 earnings are scheduled for release on Jan 29th. Current consensus estimates are shown below courtesy of Yahoo.Finance. As you can see from the graphic, the consensus EPS estimate of $8.80 for Q2 FY26 is flat as compared to last quarter, and the Q3 outlook, $8.91, doesn't look much better. Current consensus estimates for Q2 revenue are $3.25 billion. Here was the guidance management gave in the previously referenced Q1 FY26 report. As you can see, the current consensus estimates above are toward the upper end of management's expectations. The FY27 estimates have likely not been updated given TSMC's bullish CapEx plan, which was only announced yesterday, Thursday, and other recent developments this week. Just today, Friday, Seeking Alpha reported that Micron, MU, broke ground on a $100 billion megafab site in New York State. Higher layer 3D NAND and DDR5 memory designs should also be a positive catalyst moving forward. So too will leading-edge logic migration from 3 nanometers to 2 nanometers, and the associated complexity of chips based on those process nodes. That being the case, I fully expect KLA to be announcing steadily improved order flow and earnings expectations throughout this year. Valuation. KLAC currently trades with a TTM PE equals 49.3x and a yield of only 0.49% based on the current $7.60 per share annual dividend obligation. Seeking Alpha reports a forward PE equals 42.9x. That's definitely a premium valuation level as compared to the S&P 500, PE equals 31.4x. And the combination of relatively slow growth with such a lofty valuation can be seen in the Seeking Alpha Quant Factor Grade summary. The chart above pretty much supports what I have reported above in this article. Tepid near-term sales growth, a very high valuation, and excellent profitability. So why has the stock price been so strong? Answer: the company's strong free cash flow profile, meaningful share buybacks, and the company's excellent potential going forward as the sector sees a strong cycle of AI-driven CapEx growth. And all of this is very bullish for KLA given the wide moat surrounding the company's process control technology. Risks. The primary risks for KLAC stock are continuing trade tensions, the tariff war, the potential for additional China export controls, a potentially significant slowdown in the AI data center build-out momentum due to power limitations, less than expected AI efficiency gains, lack of funding, or whatever it might be, and an equity market pullback that would likely hit high-flying stocks like KLAC harder than more value-oriented shares. Summary and conclusions. Despite KLAC's premium valuation relative to its recent tepid sales growth, I rate the stock a strong buy. I do so for the following reasons. The wide moat surrounding KLA's dominant position in the process control technology niche. This is a significant competitive edge. KLA's very strong free cash flow profile. Note that the annual dividend obligation was more than covered with the FCF KLA generated in one quarter, Q1 FY26. KLA could generate close to $5 billion of FCF in CY 2026, while returning approximately 85% of that to shareholders through dividends and share buybacks. The company's excellent growth prospects going forward, especially as the cash-rich memory players look to expand capacity. A potential stock split given its current $1,567 share stock price. Of course, I know that a stock split is a non-economic factor and purely psychological. 5 $1 bills has the same purchasing power as a single $5 bill. But let's face it, investing is often psychologically driven, and in my opinion, a stock split would create significant headline news and excitement that might attract more investors to the stock. KLAC stock can be volatile, so if you decide to establish a position, I advise you not to go all in at once. Be patient. Let market volatility be your friend and dollar cost average into the stock. You might be able to catch a nice dip after the earnings report on Jan 29th, just like after the Q1 FY26 report was released. On the other hand, if you are just not comfortable buying a stock with such a high valuation, consider a more diversified approach to the semiconductor sector and buy the SMHE.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.